Yeah, welcome back to the channel. Today's video is going to be about the most obvious bubble that nobody saw coming. So, um, really just going back and talking about the quantitative easing, money printing by the Fed. I guess, when you think of a 10-year period, it's like if you said something bad was going to happen in 1990 and it's all the way in 2000 and in the year 2000, that's 10 years you could have been participating in a bubble and making money and investing in stuff that might be different to your strategy because you saw an issue from the formation of a bubble. And it's very hard to keep your conviction uh, that things are a bubble when year after year all we see is the bubble get bigger. And I often question myself, when people are making a lot of money on things that you would class as speculative. Um, some people becoming extraordinarily wealthy, like Bitcoin or cryptocurrencies, was a money maker for the last few years, which to me was definitely, in my opinion, a huge bubble. Uh, you had some of the crowd who genuinely believed that you know there was this great investment, uh, and that would be validated by uh, the all the new investors who kept buying into these cryptocurrencies. Um, but to me, they were able to do this because they were making mistakes. There was a lot of kids that were borrowing money and investors that just you know um, looking for the next high. They had all this cheap money. They kept nothing had gone really that wrong in their portfolios. All they'd done is make money. So they're like, I've got 100 grand to lose, and then that 100 grand would turn into 1 million, and then I just think it was just a hype greed. That's just my take on the cryptocurrency. I just don't see the logic in investing in something like that, but each to their own. Um, but the the housing market, the real estate, the stock market was always doing this for the last, well, really since the GFC. It came down, then it was really off to the races. And um, the problem was with what I saw was no matter what was really happening in front of me, the end game was always going to be the same. How can you have all these things that are making money going up in an environment that is 0% interest rates, that is quantitative easing, money printing, and the loosest monetary um, policy environment we've ever had, really, that I know of. And then you could transition from that environment to one where, you know, interest rates would normalize and service all the debt. Uh, Asset prices would remain high. Um, no problem, right? And to me, this always seemed like an impossible scenario, that this just couldn't play out, that everybody was wrong. And I know some people who are wrong can make an awful lot of money because they might have had 10 properties go up, 100%, 250% since they purchased them, and then they've sold it and got out and made millions. And, you know, um, we would all do that if we had that crystal ball. It's really been, but then there's also people who uh, have been stuck. They're desperately trying to sell their real estate and they can't get rid of it. You know, I have been trying to sell something, not an investment, but something that I believe would have sold within days 6 months ago, and I have not had any offers on it, and I've dropped the price 3 times, and I really can't go any lower with the price, but there's no buyers. And it's the same with real estate. The credit is starting to flow into consumer goods with the inflation, but they're scrimping and saving to pay for those inflated prices of fuel, food, energy, housing, rent, mortgage interest, credit card debt, bank loan debt, all these things, business debt, increased wage bills from business owners now have to pay all this. There's all these things that they're having to pay, and the only way they can afford it is to cut spending on everything else. So consumer spending is still high, but it's on the things that are the core inflation type products. And monetary policy is still fairly loose for the situation we've got. We've got this really high inflation, and interest rates are not there to bring it down. But this has really been the worst bubble of all bubbles that have ever formed, because it went on so long. There's been so much malinvestment. There's been so much borrowing, and people that are over leveraged big time. And while some people did get rich in the bubble, it's usually in a bubble that most people become very poor or get wiped out. And so, because we didn't get the inflation, like if we'd had inflation accelerate because a direct result of the initial QE1, that we did get inflation in asset prices. So long may it continue, right? Because we're all getting more wealth. But if we'd got it in consumer prices, where we had fuel going up, if everything started to go up, they simply could not have gotten away with quantitative easing, and it would have been a failed idea that then they would have had to raise interest rates, or they would have gone to the races and printed. Those are always the two options. You raise interest rates and you crush your economy, or you print and you crush and you destroy your currency. And printing is always more tempting to the powers that be. They always think, that raising interest rates is so painful that this must be the better option when it's not. It's the worst of the two options. So, if that had happened, we would have had a worse crisis in 2008, but it would have happened when, the US national debt wasn't 31 trillion. They would have had we all would have had massive problems from this collapse. But instead of that happening, assets just keep going up. So governments and central banks were patting themselves on the back saying, well, one day we might have to raise interest rates, but we haven't had to do it, and the general public are happy, so give the people what they want, and I'm doing a good job because the economy's great, and that's my job, is to make the economy and employment, and it's all very good, and so we don't have to actually tackle the problem. But what's happened in the meantime is that this bubble has just gotten bigger and bigger and bigger until it got so enormous that one Bitcoin was around $70,000 for a Bitcoin. $70,000 for a Bitcoin. 70,000. So 5 Bitcoins for a house. To me, that's just insane. And everything, was allowed to go further and further. An example is, I'm from New Zealand, and we had a housing bubble in Auckland start to form. And it was crazy. The prices that we started seeing at the time were crazy. And smart people, they sold a house in Auckland, and then they moved to a smaller region, a city, but just not the size of Auckland. And they paid cash for a house. They had change in the bank, maybe 200,000, 300,000, 400,000. because they were selling for like $1 million in Auckland and buying a brand new house for like 550, brand new build in other regions, maybe less. And so, you know, they had no debts. Those people would have become probably very wealthy from doing that and having a much better quality of life. But some people just keep levered, you know, getting more and more levered up on debt. And so this bubble was formed, and the Reserve Bank of New Zealand was going to tackle this bubble. And what they started doing was hiking interest rates. And interest rates, I know the 5-year went over 6%, if you fix for like 5 years. But they were like, we're going to raise interest rates. There's a housing bubble, we've got to do it. But of course, because of America's quantitative easing programs and Europe's, our dollar started to go up, and they didn't raise their interest rates. And so it was very shortly after they raised them that the government got on the phone and told them, cut interest rates, you know, you're hurting exporters, and we'll just come up with, you know, more rules for first home buyers. So what they did was they brought in, you know, you've got to have 20% deposit, and they brought in grants. If you buy a house, we'll give you money to bot towards it, and stuff, and debt to income ratios and things like that. They did a few things, but really all that happened was investors had an advantage in buying homes, and you could also use your retirement savings as a first home deposit and get up to $20,000 from the government if you built new, or $10,000 if you bought an existing house, between two, up to that much for two people. So, you know, first home buyers got desperate because they could get that free money and they could use that savings. So suddenly they actually had savings in their retirement, and existing investors, they got equity and levered up, and they started, you know, buying more and more property. So then rents became more, you know, higher, because there's just a whole bunch of problems, all because of these low interest rates. And had they tackled the housing bubble in, like, I think it was 2015, 16, something like that, had they tackled it, then we could have had some problems. Some people could have lost their homes, maybe. The economy might have got a bit harder to get work, like for construction and things. Could have been a whole bunch of things like that happen. But instead, when they cut rates again, they cut them even lower. They cut them lower to drive the dollar down. And after they did that, prices just skyrocketed. They went to the moon. And we just went into this housing mania. And then, of course, we had the lockdowns in March of 2020, and most people thought, well, we're probably going to have, you know, people are going to lose their job. People were starting to get made redundant. I got made redundant, like there was a whole bunch of stuff. And so people thought, coming out of this lockdown, we're going to have a crash, and it just went nuts because everyone stayed at home, and interest rates and borrowing requirements were scrapped, and interest rates were driven even lower, the lowest I've ever been. Everyone was paid to stay home, and the only place you could go was the gas station and the supermarket, pretty much, maybe a few other little bits, but only essential things. So we're all getting paid, but we're not spending anything, right? Much. So everyone had savings, and there was people who had trips planned overseas. When they cancelled their trips, they put new kitchens in, or renovated the house with the money instead, or they bought an investment property, or whatever with the money. And so all the money, we just had this huge boom. It's like nothing I've ever seen. The euphoria of the economy. It was like you went out for a restaurant and it was just packed. And I was sort of thinking, aren't we supposed to all be unemployed and, you know, in the depression from this lockdown? But it just was the opposite. But it was just a debt-driven, low interest rate-driven, quantitative easing-driven binge. And now things have really changed, and you know, because those you know, after that 2020 lockdown, prices went up like 50% at the peak. 50%. I mean, can you imagine? And no one thought it was a bubble. Everyone thought it was going to go up another 50%. Well, can you imagine like a house for $1 million going to 1.5 in the course of a year? A $1.5 million house going to 2,250,000 in a year. That's insane. So no one saw this bubble really coming, and most people who did were laughed at or ridiculed, and missed out on all the opportunity that people took advantage of in that time. And yeah, if you did do that and you sold everything and you got out, you would have made a lot of money. But a lot of people just went further and further into debt, and they'd go to these seminars on real estate and buy, and we're going to have this. Well, now it looks like the housing shortage we have is actually turning into a housing surplus. And if people start leaving New Zealand, we're going to have too many houses. We're going to have more than we would know what to do with. It depends on the inflow and outflow, but there are some parts of New Zealand that have got too many houses. So where's the construction work going to come from? If there's more houses than we need, then there's nothing left to build. I think construction is in real trouble because 12 months from now we're going to have higher interest rates, probably worse inflation, higher building costs, and probably collapsing real estate prices. Who's going to build? I mean, it literally will cost you more to build than it's worth, I think. And who can afford to get the money if interest rates are higher? So there's definitely like a lot of problems. But almost no one saw this coming, and you didn't have to be that smart. You really didn't. It's just you could be made to feel really dumb when you see a bubble coming and other people don't. The reason you have to be smart because the end game was always the same, and a lot of people's response to that is, yeah, but that, how long is that going to take? That could take 20 years or 30 years, or it's all going to crash one day. One day it'll be, what does that stop clock is right twice a day, blah, blah, blah. But if the end game was eventually the money that the central banks around the world were printing, combined with low interest rates, would surface into consumer prices. And when it did, the central banks would be left with two options: print or tighten credit. So that destroys the money, that destroys the value of the money, currency, and tightening credit destroys the economy. And right now we're somewhere in the middle, because they are tightening credit. They're tightening credit, but not enough to actually fight inflation, but enough to hurt the economy. So it's where are they going to go? Now, I've just had it come in. I just saw a notification from a friend of mine who just said that the test rates, I have to do a bit more research on this, but the test rates, so stress testing, that was at 6%. Was it 6% for years? They would lend these young couples mortgages and the hundreds of thousands, millions of dollars, whatever, and they would say, okay, we'll stress test to make sure you can pay at 6%. But what they didn't ever factor in was interest rates probably going to go higher than that, and how bad inflation would be, what's the economy doing, are they going to lose their job? Because if one person loses their job and interest rates are 2%, they may be able to get by with one income or 1.5 incomes if he or she's part-time. But if it's 6, 7, 8, 9, 10% interest rates, they can't afford that on one income, more than likely. So the stress tests were bogus, and it was like this security net that didn't really make any sense. So now, if my information source is correct, we have 8% interest rates, stress testing. So the banks know you're probably going to go to 8%. And is that even high enough? Because if we're at 7% now, how high are they going to go? So if if you see somebody doing something and you know that the outcome is option A or option B, and both are awful, and those options are the result of all the actions they are taking today. If you know that there's no other scenario that can play out. You might not know when, but you know that there's not another likely, there's just no other way that this can end. Then you can see it coming. But most people didn't believe we were even in a bubble. Most people thought what we had was normal. So, I'm going to wrap this video up because I've been rambling on for 20 minutes. Hopefully you've subscribed to the channel, like the video, comment, tell me your thoughts. What's the housing market like in your area? And yeah, just get involved in the channel. I'm trying to remember to upload videos every day, but sometimes it's easy to forget. And then it's too dark or something like that, or I'm working outside and too muddy. So anyway, see you in the next one.